Morning, everyone. It is 7:21 in the morning of December 9th, 2021, and this is 2022, and this is my pre-market strategy session. The first thing to mention is that PPI comes out today, and depending on what expectations are, and I actually can't find what the expectations are. I only looked for about 5 minutes before this video, but it'll be before trading hours anyway. So keep an eye out for 8:30 in the morning and watch what happens following that, and it'll tell you, the 8:30 move on the markets will let you know whether it's going to be bullish or bearish for the day, really. That's pretty much the way to trade the day too, is if PPI comes in too hot, then it's going to be bearish, and if PPI comes in cooler than expected, then it's going to be bullish. If it comes in as expected, well, I guess it's default bullish, because people are seeing the Fed as behaving less hawkish, which means more dovish, which means more bullish. Kind of silly, but that's the way it is. So a quick look at the 10-year, 2-year spread. I have a 1-minute chart that had this thing down to 899 basis points yesterday morning, and it's as it goes down, as it goes deeper and stays down, the markets can remain bullish as this yield curve continues to invert. It's really not until the market starts to normalize that the markets crash. We are coming into a bullish time of the year. December, mid-December to roughly mid-March are just traditionally very bullish on the market, because there's a lot of buying and selling going on, jockeying for positions, for portfolios managers to perform for the year. And then we have Bitcoin over here. Now this is this trend line right here is a neckline that was put in by Bitcoin at the tail end of this Wyckoff distribution. It finished off with the head and shoulders, and it's created this nice trend line right here. So we could pop up above this trend line for a few days, but it won't be long until it continues in this downward motion. So Bitcoin could see a little bit of a bull run here, or it could hit resistance here and fail. I don't think that's going to happen. I think that it's probably going to catch a little bit of a bid and move up for a bit. Everybody's expecting for it to move down, but then I do expect by the time, mid-February rolls around, for it to be back down here in the 13,000s area. Then what's the other thing? Let's see, PPI, Bitcoin, the Qs, and the 10-2 inversion. Yeah, that's pretty much everything right there. The Qs, it looks to me like the Qs are going to leave behind this gap. There's a gap right in here, and I was looking. I wanted it to fill. I wanted the Qs to come down and fill this gap and then move up. But as of right now, it's looking like it's going to stay consolidated up high up here. The Qs are staying consolidated roughly above 280, and not even getting really very close to this 276 level. And so it's kind of looking to me as though, the Qs are going to make a Christmas rally here and probably break through this top support and resistance line. It'll just be a matter of time, though, until it plops back down below it, and eventually this gap will get filled. So however high the Qs can reach during the Christmas rally and the sort of the end of the year rally, just remember that when it rolls over again after the 10-year, 2-year yield curve corrects, this is definitely this 276 to 267 level right here is definitely a part of the chart that needs to be repaired. So it's coming back down there at some point. Somewhere probably within the next 12 months or so, we should see this yield curve inversion correct. All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I'll see you on Monday morning's strategy session. Have a great weekend, everyone. Thanks for tuning in. Goodbye. I am out.